I'm about to expose my own industry and probably piss off every mortgage broker in Australia. But after years of helping investors grow their portfolio, I can't stay quiet anymore. Your mortgage broker is keeping you poor by only using safe lenders, the well-known lenders. They're scared to recommend the lenders that could get you an extra $500,000 to sometimes even $1 million or $2 million in extra borrowing capacity. And I'm about to reveal why most brokers are too lazy or too scared to help you access your full borrowing potential. And stick around because I'm going to show you what the secret tier of lenders that most brokers won't even touch, but could unlock hundreds of thousands of more borrowing capacity for you. Look, my name's Aagam. I run Finance As You Grow, which is a mortgage broking company which helps investors secure millions in property loans using lenders that most brokers are way too scared to recommend. And we've settled over $100 million in lending for these investors in the last 1 year. Here's the uncomfortable truth. Most mortgage brokers are lazy. They stick to the big major banks, or maybe a couple second tier lenders who are a little bit easy and have nice rates, and they don't have to think too hard. But this safe approach is costing you as an investor hundreds of thousands in borrowing capacity. And today I'm going to expose exactly how. Let me break down something that most brokers will never actually go the length to explain you. There are actually 3 tiers of lenders in Australia. Tier 1, you got your major banks, your CBA, ANZ, Westpac, NAB, or even Macquarie, which is now part of the Big Four, or even Macquarie, which is part of the big list. They have somewhat of a loose criteria which allows most people to get in, but maybe for their first or second or third property. That's about it. Tier 2, which is sort of your tier 2 lenders such as ING Bank, Me Bank, or Bankwest. They actually have similar criteria to your tier 1, maybe slightly more flexible here and there, but I'd actually say their specialty is slightly better rates because that's what they play on, or slightly better policies, but nothing jaw-breaking. But then you have the Tier 3, which is where the stark difference in borrowing capacity lies. These are lenders like your First Mac, La Trobe, Resimac, Brighton Home Loans, Liberty Home Loans. And honestly, your broker probably has never recommended them to you. Tier 3 lenders often have more generous serviceability calculations, which simply means that they have a higher borrowing capacity limit compared to your Tier 1 and Tier 2 lenders, and often can touch deals that Tier 1 and Tier 2 lenders would never touch. But most brokers won't recommend them. Why? I honestly believe they're too scared of overwhelming clients with a lender that they've never heard of, or they might require more work to do, or quite frankly, most brokers don't understand the policies well enough. If you want to know exactly which Tier 3 lenders could boost your borrowing capacity, I've got a free training that breaks down the specific lenders and their unique benefits. Link is in the description. Why don't brokers recommend these lenders that could get you more money? I believe there's 3 reasons. First, they're more work. Tier 3 lenders often have different application processes, more documentation requirements, sometimes slightly longer waiting times. It's easier to just stick with the big banks so you can just get quick, easy approvals. Second, they're scared of the unknown. Most brokers have never actually even lodged an application with these lenders. In all honesty, they're not that much more riskier or dodgier. They're just different. They serve a different purpose. And lastly, some brokers genuinely just don't even understand the policies of these 3rd tier lenders that can quite literally double, triple, or even quadruple your major bank borrowing capacity. For example, I had a client, Anita, who was told by 3 different brokers that 300 to 350 was their absolute maximum borrowing capacity. Now, as we all know, that's jack all. The big banks all said the same thing. However, I took the exact same application to a Tier 3 lender, and guess what? We were approved for $851,041. Same income, same deposit, same person. The only difference, I knew which lender to approach. And you might be asking, she probably paid like 2-3% higher. She literally paid the same as what she would pay with the major bank. Now, this extra $501,000 in borrowing capacity meant that they could buy in a better suburb, closer to the city, closer to what they wanted. And guess what? Since they've bought it a year ago, in December 2024, the property's already grown $80,000 in value since they bought it. This is the exact kind of strategy I talk about in my discovery calls. How much you can borrow with tier 3 lenders based on your specific situation. If you'd like a free consultation with me, click the link in the bio. Now, let me give you some real life examples of how tier 3 lenders have changed my clients' lives. Just like I was saying about Anita, she was a property investor with 3 investment properties. Big banks offered her $300, $350. Tier 3 specialist lender that understands investors, $851,041 approved. My other client, Raj, he had over $8 million in property. And he was with the major banks and he only had around $3 million worth of lending, but they said, we can't lend you anymore. We took him to 2 separate third-tier lenders and guess how much we extracted in equity? A whopping $1.8 million in extra lending. He told me that he had spent over 8 years finding a broker and not one of them could get a single extra dollar. And he actually mentioned after it was all approved that the broker was just trying to safeguard him. He just wanted to look out for him and came from a very caring perspective, but in this case, it didn't help him to grow. Now with this $1.8 million, he's able to buy a business, he's able to buy properties, he's got flexibility and really grow his financial position. And lastly, another client, Yash, he's a young 23-year-old and he was looking to buy his first investment property on below average income. Major banks said $300, $350K max. Took him to a third-tier lender and got him $579,436 at a rate that was 0.5% less than your major banks. Crazy. Look, here's what most people don't understand. Tier 3 lenders aren't risky lenders. Many of them are backed by major institutions, sometimes even big banks, and a lot of the times family investors or family offices who invest in these safe lending institutions. The difference is they try to specialize. They want to, instead of being everything to everyone, they focus on specific kind of customers, your property developers, your property investors, your retirees, your high asset value but low income earners. And hence they can cater to different sort of scenarios. Now, I'm not saying tier 3 lenders are perfect. There are some things you need to know. Firstly, and the most obvious is, rates can be slightly higher. We're talking maybe 0.3% to 1% or maybe even 2% higher than the big banks. But they come with a strategy. If they're giving you double, triple, or sometimes even quadruple more borrowing capacity, the small difference in rate is literally irrelevant. Second, they have different features, maybe no offset account or shitty internet banking apps. But again, if they're the only lender that's gonna approve your loan, you don't have much of a choice. Thirdly, exit fees or switching costs or application fees might be higher. But really, that's just the cost of doing business. If any of these fees topple over your feasibility of any investment, you shouldn't be doing that investment in the first place, because most investments should be stress tested. If you were to pay 2-3% higher, can you still afford the loan? Is it still worth holding that property? These kind of things need to be stress tested upfront anyway, regardless of whether you go with a big bank or a third-tier lender. The real key is just working with a broker who understands these lenders inside and out. They can educate you on the pros and cons of the lender. You want a broker who can match you with the right tier 3 lender for your situation, not just throw out applications at random lenders hoping something sticks for 1/4 of the borrowing capacity that you could actually get with perhaps third-tier lender. I've spent hours and weeks talking to BDMs from these lenders who understanding their latest policies, their appetites for different type of customers, different type of deals. Most brokers can't even be bothered doing that. They just stick with their big banks and get the easy business. So how do you find a broker who actually knows and uses these tier 3 lenders? Perhaps it's asking them these specific questions like, do you have any tier 3 lenders that you actively use? Have you done deals with them before? Have you done deals with a Liberty, a Pepper Money, a Latrobe, a Resimac, a First Mac? What's your process for maximizing borrowing capacity beyond the big banks? Honestly, if they can't answer these questions with specific examples, they're probably just a big bank broker who's limiting your options. Also, ask to see their lender panel. A good broker should have relationships with at least 15 or 20 lenders, including tier 3 options. Not that you'd be using the tier 3 options so much more than your big banks, but it's important to have those tier 3 options. And here's a red flag. If a broker is immediately dismissing tier 3 lenders as risky or not worth it without even understanding your specific situation or goals, that's your cue to find someone else. Look, I've created a comprehensive free training called Unlocking Hidden Borrowing Capacity with Tier 3 lenders, where I go way deeper than what I can cover here. I break down the top Tier 3 lenders, their specific strengths, the type of clients that they prefer, and the exact scenarios where they'll beat the big banks in borrowing capacity. I'll also guide you through the documentation strategies that work best with each lender, the common mistakes that get your applications rejected, and how to present your case for maximum approval chances. Look, and it's completely free, no strings attached. I'm just passionate about helping people access their full borrowing potential instead of settling for whatever the big banks offer. The link's in the description below, and if you're serious about maximizing your borrowing capacity, this training could literally be worth hundreds of thousands to even millions of dollars to you. Hit subscribe if you want more insider content about the lending industry, and drop a comment. Have you ever been told you can't borrow enough? I read every comment and might even feature your situation in a future video. And if you're in Australia and want to work with someone who actually uses the full spectrum of lenders available to their max ability, you can book a call with me, links in the description. Remember, your borrowing capacity isn't limited by what the big banks say. It's limited to your broker's knowledge and willingness to do the work, as well as your own personal capacity to repay the loans.